Assalamu alaikum and hello everyone. Welcome back to the show. We have a very special show tonight because of the topic we have. Today we are diving into the world of mortgages and people who doesn't know anything about it like me, who are beginners into this field and people who actually know about this thing. It's going to be very beneficial for both of them. And for that podcast, we have in the studio a mortgage officer, Zach, and it's been 10 years. He's in the industry. He's very young, very passionate. So this is the best thing that we guys can relate to him. And I'll try to ask what is like. It's going to be a one-on-one class, and I'll try to ask in the end, like if we want to become like him, what's the procedure? Zach,
How you doing?
first of all, thank you so much for joining us. Thank you so much for coming.
Thank you for having me. Thank you.
Thank you, brother. How's everything? How's
Pleasure.
work?
Work is great.
You were telling me that things are fluctuating, so
Yeah.
it's going to be when I guess your work, your rates are fluctuating, your life is fluctuating. No,
Right. Exactly.
being a mortgage officer, if the rates are not over there, I guess you guys fluctuate every time.
Oh yeah. Yeah. You can definitely say that again.
In the beginning, a very basic, or maybe the first question I need to ask you: what is a mortgage?
Right. So a mortgage is a loan. Okay. It's a debt that you accrue. It's a loan from the bank that you're going to use to secure a property. Okay. It can be a 30-year fixed mortgage, a 15-year fixed mortgage. It can be an adjustable rate mortgage. So this is what a mortgage is. It's a loan to secure property.
So I get so in general when we talk about like the home buyers, like we want to buy a house. How does it work in the states? If I want to buy a house, what's the process like? Because I know mortgages are involved in that process.
Right.
So how does this process works?
Right. It's pretty simple process, and I like to explain it like this. There's three C's to a mortgage, right? And if you can do those three C's, or have those three C's in mind when you're thinking, can I afford a house? Can I purchase this property? So the first C is going to be credit. That's pretty straightforward. Credit, your history of paying back any credit cards that you might have had, no late payments. What's your credit score, right? That's what first pops to mind.
Would you mind if I cut you in the first C?
Go ahead.
Because it is very important. Everyone needs to ask this. What is a good credit? To secure a good loan, what is actually the number? If I want to buy a house and I want the minimum rate, what is going to be a good credit?
Right. So good credit is of course above 700, above 750. That's great credit, right? Now the great thing about credit is if you haven't completely tarnished your credit, okay, even if you're at a 500, 550, maybe even less, there could be hopes that we can build your credit. All right. So great credit, 800, 803, great credit score. 500, 550, not so good, but we can help you. We can help you build it.
Can you explain the process of building a good credit for like all the listeners who want to build a good credit, and what things they can avoid to build a good credit?
Okay, yes. So credit is one of the most important things that you can offer to apply for a mortgage. So what you can do to help yourself build good credit is to keep your usage, okay, your balance of your limit of your credit cards under 30%. Okay. That's going to help you build good credit. And then everything else I don't really know. I'm not a credit guy, but that's what I do to help myself build good credit. Make on-time payments. Set yourself up for automatic payments, so you don't have to worry about missing a payment ever. I've heard from a client that they missed a $5 payment on a credit card. They thought they zeroed out their credit card, and then there's interest on the on the balance that you're paying off. That was added. The guy thought he paid off his credit card. $5 went into balance. It tanked his credit score 100 points.
For just $5.
Just $5. And
I get it.
so having yourself on automatic payments is very important.
So, in short, 700, more than 700, 750 is a good credit score to get good payment structure, right?
Yes.
To get the good rate. So I
Yes.
get it. So let's move on to the second two C's we have more like after the credit. What are the other C's you were talking about?
Right. So the second C is going to be capacity. Okay. So what that basically means is do I have the capacity to pay back this mortgage on top of everything else that I have?
Okay.
Now the banks don't take into account food, cable, phone bills, miscellaneous charges you might have. So you have to know, can you take on the capacity with all these additional things on top of your car payment, credit cards, personal loans, student loans? Those four things is what the banks are looking at. But everything else, banks don't really take into account. So you have to know, do I have the capacity to pay back this mortgage? And that is with your debt to income ratio.
Can you explain it a
Yes.
bit?
So that is with your DTI or debt to income ratio. And so that's basically what you have is a monthly income against all your monthly debts, including the mortgage payment.
I get it.
Car payment, minimum payment per month. Credit cards, combined minimum payment per month. Personal loans and student loans, minimum payments per month. Plus the mortgage payment against your monthly income is how the banks determine your debt to income ratio.
I get it. And is there any sort of percentage like what is a good ratio if like we talk about the numbers?
Yeah,
in
so
general?
typically you want to be under 50%.
Under 50%.
Under 50% of your total income.
So let's just say I'm just simplifying for all the people who are listening at it. For like let's just say I have 10,000 income. So my like that ratio, my loan should be or debt payment should be below 5,000, right?
Correct.
To keep that below 50%.
Yeah, so the mortgage payment plus the car payment and everything else that I mentioned, those four debts, has to be under 5,000.
I get it. Thank you. And let's move to the third C. What is it?
Yes, great. So the third C is collateral. Okay, so you have credit, capacity, and now you have collateral. And that's basically how much am I going to have, how much skin am I going to have in the game, how much money am I going to put as a down payment, right? That way the bank has some sort of collateral, right? And that's where things have gotten, flexible and restricted. Back in the time 2008, you have things going wrong because no one was having collateral. So now you have to have some sort of collateral to be able to afford a mortgage.
I get it. So, the things I heard were like, especially depending on the down payments, like we need to have the down payments as low as possible, and it is beneficial. This is what I heard. Probably I am wrong because I don't know anything about it. Should we pay the maximum down payment or we should be on the other side?
It's all about what you can afford for the monthly payment,
Okay.
right? So if you want to put down 5-10%, as long as that monthly payment is affordable for you, then it should be okay. Okay. You might have some people saying that they want to put down 50%, 60% to have 40% to be able to not have that much loan. For me, I think the security for me is having the money in the bank. That's just me. So the main thing is the monthly payment affordable for you.
Yeah, so the money in your bank account is the money actually you have, right? So you want to make as low as possible the down payment, right?
Right. So, you can have all this money that you put down on the property, but now in order to get that money, now you have to refinance.
It's like one important thing. Most of the people, the people who have average income, most of them, everyone thinks this thing: should we buy a house or we should rent it? So this is most of the students, or maybe the people who have just started their companies. They're always thinking into it, like they should have their own house, or maybe renting is the best strategy. What do you say about it?
I always say, the best time to purchase was yesterday. Okay. You don't want to be paying somebody else's mortgage. You want to be building your own equity. Okay. The rates are always going to be going up. The rates are always going to be going down. The value is key, though, right? So if you can start building equity, I think the best time to purchase was yesterday.
So you think we have missed the train? We have missed the
Not
train.
yet, not yet, because there's always trains coming.
So you have we are speaking about the rates. So let's just simplify it for the people. What is the importance of interest rates in this whole process?
The interest rate is going to determine what your monthly payment is going to be, the principal and interest. So with the monthly payment, you have what we call in the industry is PITI, P-I-T-I. That's your principal, your interest, your taxes, and insurance. So with that, you're going to have your monthly payment. The interest rate is really going to determine what that principal and interest payment is going to be.
So let's just break down everything for the people. So if we buy a house, so let's just suppose that supposedly a house is for like 500,000 maybe, and then let's just break down that PITI for them.
Right. So actually, let me pull out my handy dandy mortgage calculator.
Yeah.
So yeah, let's just put a number in here. Around this area, I think it's safe to say 650,000 might be average around this area, right? So if you put down 10% on that property, and you have an interest rate of, let's just say, 6.5, which depending on your credit score, you could get lower. You have a principal and interest payment of $36.97.
3697.
All right. So now you have to take into account taxes, right? So property taxes around here, let's just say 12,000 average. So
It's per annum, right?
what was that?
It's annually, right?
Annually, yes. But the monthly payment is going to break it down into monthly.
Oh, I
So it's
get it.
$1,000 a month plus what you have the principal and interest of $36.97, and then you have to count in homeowners insurance, which on average is $150 a month right now, average. And then you have to count in mortgage insurance. So mortgage insurance is if you put down less than 20%,
Okay.
you're going to have mortgage insurance. And let's just say mortgage insurance is another $150 if you have a good credit score.
Okay.
So altogether, you're looking at $4,997 a month. Let's just say $5,000.
I get it. Which how much down?
That was 10%.
10% down.
So, $5,000 a month is going to be your monthly payment. Okay? All in, taxes and insurance as well.
Everything is included for like 650,000 like for their house,
That,
right?
yes,
And with 10% down.
10% down with a good credit score you're looking at.
So, Zach, let's just talk about your field. Like, what's the role of a mortgage broker? So most of the people they get scared out of it. We need to have friends
Right,
like
right,
you,
right.
or we just get scared of
Right.
like of you. So what's the role of a mortgage broker?
Yeah, so my job as a mortgage broker is to take the application, structure the loan so that the client qualifies for the mortgage based on everything, the 3 C's, right?
Okay.
So that's what I do. And then, more importantly, what I do is I shop around with the banks that we use. So as a mortgage broker, we work with over 30 different banks. So I'll take this client's application and shop it around with the banks and see who's offering the best interest rate possible. So for the consumer, using a mortgage broker like myself is the best thing you can do for yourself, because we're going to work for you, fight for you, get you the best interest rate, and then we're going to process the loan so you don't have, any headaches throughout the process. Because, you know, we've both heard probably nightmare stories of, headache process, getting a mortgage. So it's our job to make it as easy as possible.
So we need to have friends like you in which you guys can help us to get secure better loans, right?
Right.
So your job is to get us like secure us a loan, or obviously in our favor, like with low rates or maybe
Yep.
So this is your actually job.
Absolutely. So there's many different ways that you can qualify your income. So I've been working with the self-employed community for over 6-7 years now. I'd say 70% of my business is self-employed clients.
Yeah.
So I know exactly what the banks are looking for. Not your conventional banks, but we work with other banks that are geared for self-employed, and they have programs that are tailored for a self-employed client. So, whether you're in business only 2 years, or if you've been doing this business for 5, 10 plus years, we've got a program for you.
I get it. Like, what's going to be the difference between a good mortgage broker and a bad one? What's going to be the basic difference?
This right here, my friend,
The phone?
the phone. Yes. Are they going to answer the phone? Are they going to respond to you? Are they going to get back to you in time? All right. I love to say speed is my thing. Okay. If you don't hear from me, if I don't answer the phone, guaranteed I'm going to get back to you within 10 minutes. Okay. And that's what really sets aside the mortgage broker, is this and the experience, right? You can have a great company behind you, great leadership. That's what helps me close my deals, is great teamwork. But experience that I have, knowing what the banks are going to look for, knowing what the underwriters want. And, that's kind of the difference that sets me aside.
That's beautiful. That's beautiful. And I guess the thing we were talking before the podcast, like the discussion we had, if you love your job, I guess that is the most important part. Because if you're doing something which you love, always you're looking for those innovations, right? You're
Right.
improvising the things. You are using that creativity of yours. Because
Right.
people who actually don't love their job, they're just doing it for like just for the sake of work, like they're coming to the office,
Right.
just counting those hours when they're going back home.
Yeah.
So obviously then that is going to like keep you aside from those people. So if you're
Yep.
passionate about your work, obviously the respect for your work you're going to have is going to be different, right?
Right, right. And people see that, when you're in the office or when you're doing your job, whatever you might be doing, if you're, down in the dumps and sour face is what I like to say, you know, people see that and they're going to remember that about you. I say instead, be the light in somebody's day, right? Put a smile on their face. Go out of your way to say, how are you doing? You got to wake up every day and just thank God, that, you're here to, not only live another day, but to do what you're doing in life. So yeah, you got to love what you do. You got to love it.
That's beautiful. That's the inspiration I needed from you. So let's get back to the topic. So in general, I need to have more discussion about mortgages. Uh, in general, so as a beginner, if I actually don't know about the things, what is the importance of political situation of a country on this thing? Because if there is now elections are coming in the states, what's the impact of that thing into the mortgages?
So politics, of course, have a big play on what's going on with the market, other countries, events in other countries and what's going on. Other countries definitely have a big play in what's going on in the market. And, you might have some people that are saying, this is going to happen. This is what I'm going to project to happen. The interest rates are going to come down. At the election, the interest rates are going to go up, depending on what happens. You can't really focus on that, is what I say. The only thing that you can really do is just make sure you can put yourself in a position, work with somebody that's going to make sure they're going to get you the best interest rate now, right? Because again, going back to what I said, the best time to purchase real estate was
Where's
yesterday.
yesterday? I get it. So when we hear about these things that the market isn't good, real estate has been affected by the economy or recession or something like that is going. So what we are like actually saying, what do we mean by that thing that market isn't good in your field? What does it mean actually?
It might mean, that your own stocks are doing bad. It depends on what someone's talking about. I don't really, I'm not really sure what the question's about.
So the question was actually we talk about that the real estate market these years is not that good after the COVID. It has been affected. So when we talk about some sort of industry like it has been affected, what does it actually mean? Is it a good
Yeah.
time to buy something? Like I am just asking from that point of view because
Okay.
as a
Okay.
buyer we just get confused. Like we should invest in it or maybe so from the investing purposes we should as a beginner invest in this or not because of the time going on. So that is the main question. If as a beginner.
Okay. So yeah, I was a little confused because you said that the market's not good,
Yeah.
but I think the market's great. It's a great time to buy. The values are, it's still a bidding war. If you can get yourself a good property and work with a great real estate agent, real estate broker, you can secure still a great deal. If they have the listing themselves, great. Or if you're a buyer agent and know the listing agent, perfect. Let's make the deal happen. Rents are going up. Values are they're still increasing, and interest rates are down. So I would say right now is the best time to buy.
And I guess yesterday was the best time to buy.
Absolutely.
Perfect. So Zach, what do you think about the interest rates today?
Interest rates today, I think they're great. Okay, on average, since the introduction of the fixed rate mortgage back in 1971, interest rates have gone up, as high as 20%, right? And as low as 2, right? So, since the origination in 1971, on average, the interest rate has been between 6 and 7%, right? So right
Okay.
now, if we're able to lock in between then, I think it's pretty great.
So, from your point of view, like the things you said, what is actually a fixed rate mortgage like, and plus what is adjustable? What are the pros and cons for both of them?
Right. So the fixed rate, you're going to have that interest rate locked in for 30 years or 15 years, the lifetime of the mortgage, right? That's what a fixed rate mortgage is. So you're locked into that payment unless you refinance or, change the mortgage, the terms of the mortgage. The adjustable rate mortgage, now you can have an adjustable rate for, 3 years, 5 years, 7 years, where it's going to be locked in for the first 3 years. And then after that, it's going to adjust based on the market.
Okay. So, what do you suggest with your experience? What is better for like like the beginners who are into this market for the first time? So, what should be our priority? We should get those fixed rates or adjustable. What is your say
I
on?
always say to go ahead and secure yourself a fixed rate mortgage. You might think the adjustable rate is great. I'm just going to have it, might give me a lower interest rate for the first 3, 5 years, 7 years. But no one knows what's going to happen in the future. Anything can happen to any part of those 3 C's. So your credit score can, have something can happen, right? Anything can happen. And that's why I'm always, saying to secure yourself that fixed rate mortgage. That way, if you're in a better position in the future, now the ball is in your court, right? You can choose, do I want to refinance? Is it going to benefit me? Not, oh, I have to refinance now.
I get it. So, talking about refinance, how does refinancing helps? What is actually refinancing, and how does it work?
Right. So there's really two reasons why you might want to refinance. The first reason is to pull out equity in your property,
Mm-hmm.
and do things such as maybe pay off the debt that you have accruing on a monthly payment. We can wipe that out for you. Car loans, credit cards, personal loans, you can wipe that out and have your monthly debt down to zero again.
That debt to income ratio
Yes,
is going to be improved by that.
absolutely.
I get it.
So if you have $2,000 a month and all these expenses, $3,000 a month and all the expenses, and if you have some equity, we can pull some equity out of your property and wipe that out for you. And then the other option that you might want to be looking into a refinance is, you know, can I lower my interest rate? Can I lower my monthly payment? Or if you have, PMI on your previous loan, can I knock off that private mortgage insurance? So these are kind of the reasons why one might want to refinance.
I get it. One more thing. So, for the first, when I'm buying my house for the first time, what question I guess most of the people think is, what if after 5 years I want to sell that property? So I am stuck somewhere. I need money or something like that. Because most of the people we think is 30 years is a lot of time. I cannot be like consistent in that thing, or maybe I want to move or something. So is it possible after 3, 4, 5 years I can sell that house and get my equity back? Like how does it work?
Absolutely. Yeah, so you can sell for whatever reason, pay off the mortgage, and then whatever's left over will, either go to the proceeds are going to go. Obviously, you have a real estate agent; they have to pay. But then after that, after the mortgage tax is paid and the transfer taxes, whatever's left over is yours.
So I guess it is like, so that's the best part you are telling, because most of the people they just scare us. I guess because what you are saying is everyone should buy a house, because if I am living here, obviously I have to pay rents, and I'm even being a student, or being maybe I have just started a company and I am just paying my rent every month, not getting any benefit out of it. And if I somehow manage to buy a house, obviously, if after 3 years I am moving somewhere, obviously I have equity, right? So
Yeah,
it's a
you
good
would hope
thing.
so. Yep.
Yeah. So, Zach, I have a few questions to ask you, which people ask me to ask you. So, I need a few answers, maybe in short, in which you can help people. What are the different types of mortgages available, and which one would be the best for my situation? Like,
Yeah, so there's many different types of mortgage loans available. You have your first time home buyer program, FHA loan. You're going to have your conventional loan. Okay, so first time home buyer allows you to have a lower credit score, lower down payment, and allows you to have a higher debt to income ratio for any monthly debts that you might have. Conventional, you're going to have a little bit higher interest rate, but not mortgage insurance for the life of the loan. Okay, and then you're going to have your stated income programs or self-employed client programs that help out with the self-employed community. Now, I told you earlier that at least 70% of my business is self-employed clients. And these are hardworking individuals. Self-employed clients need help getting qualified for a mortgage more than anybody else. There's banks that require 2 years, 3 years worth of taxes. And, working with a broker like myself, we have programs where you can show no tax returns and qualify for a mortgage, or 1 year tax return if you want to get a conventional loan. These are definitely I would say the 3, 4 different types of.
and what's the best for like first time home buyer? Which type is the best one? What do you prefer?
So a lot of people are looking at the FHA loan, okay, which it's better today than it was 3 years ago, 4 years ago. The FHA mortgage insurance premium is down compared to a few years back. But in my opinion, the best loan that you can get yourself is a conventional mortgage, all right, if you can put down 5% or 3% in some situations, depending on your income, we can get you lower PMI. It'll drop off after 8 years, so you're not going to have it for 30 years like an FHA loan. If you put less than 10% down on an FHA loan, that mortgage insurance premium is going to be with you for the life of the loan. All right, that can be an extra $300 a month. So with conventional, that it's going to drop off. It's going to drop off.
I get it. So, what is private mortgage insurance and when is it required? What is PMI?
Okay, so PMI, private mortgage insurance, and that is additional coverage that the bank is going to require, okay, for more risk, right? So if you put less than 20% down, the bank is going to require PMI on the loan, which could be, an extra $100, $200 a month. And that's another benefit of working with a broker is our banks that we use have some of the lowest PMI in the country. So working with us compared to another bank, retail bank or direct lender, we might be able to help you get hundreds of dollars off your monthly payment just by working with us. But yeah, PMI is going to need to be on the mortgage if you're putting less than 20%.
I get it. Yeah, I get it now. So, what are the potential risk and benefits of refinancing a mortgage in the future? I guess we have discussed it, but in short, if you can answer it.
Yeah, so the risk in refinancing in the future, you can refinance for many different options. I mean, we discussed a couple. I was thinking about another one. Maybe if something happened in your family where you might want to refinance off of the loan. Maybe someone wants to look at maybe coming off of this mortgage and buying another property on their own. So getting somebody off the loan is another reason why might somebody want to refinance, other than lowering their monthly payment or taking out the equity from their property.
I get it. So, how do closing costs work and what should I expect to pay?
That's a great question. So closing costs is a combination of a bunch of things, right? So first, you're going to have your origination fee. Okay, that's going to have if one person might have underwriting fee, third party processing fee, a processing fee with the bank, application fee. Those are what I call fluff fees, and fees that don't need to have, they don't need to be there. Now you might have an origination fee because now you're being quoted 7.5%, but now I can come around and offer you 6.5%. That's going to have a fee for that to be able to secure you a wholesale interest rate, right? So that's the main difference that kind of separates myself and another bank is that fee. Then you're going to have your appraisal fee, your attorney fees, and then you're going to jump into your prepaids and your escrows. So when you buy a house, the bank's going to want to take about 4 to 6 months of property taxes and hold them in an escrow account for you. And then you're going to also have to reimburse the seller for any taxes that they might have paid already. So these are called prepaids and escrows, and that's another big part of the combination of closing costs. On average, I'd say closing costs here in New York is between 4 to 6%, depending on what type of interest rate you want.
I get it. A very important question. What type of clients actually you can help?
That's a great question.
Yeah.
It really is. The answer is every client, right? Everybody that's looking to get a mortgage, should come and speak to a mortgage broker. If it's not myself, make it another mortgage broker that you might know. Hopefully that it is me. I want to help everybody. But definitely get yourself talking to a mortgage broker. For a consumer, working with a mortgage broker is the best thing that you can do for yourself. The type of clients that we can help is everybody, whether you're a school teacher, whether you're in the police force, whether you're self-employed, private transportation, any type of client, we have a program for them to get qualified.
So it's a good thing. Everyone can approach you, right?
Everybody.
I
Yep.
am going to put his socials, his number, most of the details. You can just contact him for any sort of help you want. One last thing, Zach. If you have if you have a message for all the people who are listening to you, who are young, who wants to do something, if you have a message for them.
Just keep doing what you're doing, keep grinding, always look at the next step, okay? Plan ahead, and then makes you execute your goals, okay? Having your goals written down is a big thing. When I was 21, getting licensed in the mortgage industry, I had my goals. I had my 5 and my 10-year goals. And, here I am 10 years later, and I can say I did hit those goals. Main thing was, I think it was really, I had them written down. And I kept reminding myself that every day, what my goals are and what I'm doing, why I'm doing them. Why am I doing this? I think everybody can say it's for their family, right? It's for you and your family.
That's beautiful. And still, Zach, thank you so much for your time. I know you have been very busy, but you still gave us your time.
Of
And
course.
thank you so much.
You're welcome. Thank you.
And thank you so much for watching, guys. If you have any questions related to him, related to Zach, I am going to put his email, his Instagram. You can ask him directly. Otherwise, if you have any questions, just put it in the comment section, and we can make another podcast. So this podcast was 101 for us, targeting beginners. And yeah, if we get a great response from you guys, we can make another podcast for the people who are actually doing it or who wants to get more professional advice. Thank you so much for watching, guys. And yeah, for the take of my take from this podcast is going to be everyone should invest in it. Everyone needs to have information about it because there is a lot of information which is misleading. So you need to have these professionals on your side which can help you. Maybe we are paying rents. Instead of paying rents, I can buy my own house. So if you people have such guys with you, they can help you in the near future in building your own equity. Thank you so much for watching, guys. If you have any questions, please put it in the comments, and like, share, subscribe, and keep supporting us. Thank you so much. Thank you, Zach.
Thank you.